So input and output tax. As I mentioned the other time, it's important as well that you consider some of the issues that we did in the level 2. It's one of the reasons why we are dealing with VAT. Because if you check your advanced taxation, there is nothing like VAT there. But it's fundamental to taxation. That is why we are looking at it in relation to that. And when it comes to, I don't know though, but the examiner could set question on income tax. I don't know though, but during the revision, I will go through some issues about that for you. Because sometimes you would think the examiner will focus on the level 3, but he will just go and shock you with some fundamentals, and you sit there and be like, Jesus, so they will be that. They will be that. So let's go. Input tax. Input tax. What is it about? Yeah? Input tax. What is it about? You tell me, Singular, right?
Input tax is the tax paid on the purchases that a company makes, or inputs on the inputs of the company.
So it is a tax charged by a supplier, right? By a supplier. Okay. So it is the VAT charged by the suppliers on the business purchases. It is the VAT charged by the suppliers on the business purchases you're good? On the business purchases and expenses. On business purchases and expenses, including expenses, including, so either business purchases or what? Expenses. Are you getting the idea? So including goods and services supplied to the business in Ghana, including goods and services supplied to the business in Ghana, goods and services supplied to the business in Ghana, goods the business imports, goods the business imports, and goods the business removes from wholesale. Goods the business removes from wholesale. Goods the business removes from wholesale. Okay, note this down. It should be noted that it does not, however, include goods or services for someone else or your purchases for personal use. Are you writing? I'm just saying it. Or you have to write it. Okay, so put it down. Notes. It should be noted that everything you want to write.
Yeah.
It should be noted that it does not, however, include goods or services goods and services for someone else, goods and services for someone else, or purchases for personal use. Goods and services for someone else, or purchases for personal use. So when you buy office equipment for the business, you pay VAT on it from the supplier. You pay telephone bills, you're going to pay VAT on it, definitely, by the company. Then payment of solicitors, okay, lawyers, they may charge you VAT on all of the bills in relation to that. Audit services, you may charge VAT. That is if you are a registered VAT agent. Okay. However, like we mentioned earlier, companies are required to what? Claim their input, the VAT that they paid or the input tax. So let's look at input tax credits and refunds. Input tax credits and refunds. What are the rules governing this? So let's look at the fundamental rules or principles for claiming VAT. Any idea?
Claiming input VAT.
Yeah?
Cannot be claimed twice.
Cannot be claimed twice? Okay. Need that count me. Right to who?
A commissioner
About what?
to claim your refund. Then when, this is different from when it exceeds.
Because you will charge output VAT, isn't it?
Yeah.
Or output tax. So at the end of the day, you must file returns. Okay? Then you have to look at your output and then the input. If the output exceeds, then the difference will have to be paid to the tax authority. But if the input exceeds, then you have to claim what? Tax. In either case, you still have to file what? The tax returns. You get the idea. So let's put some of the rules down.
Wait.
No input tax credit may be claimed. No input tax credits may be claimed. No input tax credits may be claimed on purchased and expenses relating to exempt supply. No input tax credit may be claimed on purchases and expenses relating to what? Exempt supply.
Then no input tax credits are claimed in relation to expense relating to entertainment.
Entertainment. Okay. So next one. Like the one he said, no input tax credit may be claimed more than once. No input tax credit may be claimed more than once. No input tax credits may be claimed more than once. 3. If a taxable person makes both taxable and exempt supplies, if a taxable person makes both taxable and exempt supplies, the input tax should be allocated between these two types of supply. If a taxable person makes both taxable and exempt supply, the input tax should be allocated between these two types of what? Supply. And the tax credit on the taxable supply may be reclaimed. And the input tax on the taxable supply may be reclaimed. So if during the year you bought things and it's still about exempt supply and also taxable supply, If you paid input tax on the VAT on this, and you paid input VAT on this, what we are saying is that you can only what? Reclaim the tax on the taxable supply. Next one. No input tax can be taken in respect of entertainment. In respect of entertainment. No input tax credit may be claimed in respect of entertainment. Entertainment. Okay, so that's it about that. Okay. Note the following. So these are the rules. Note the following. Note the following. 1. If all purchases and expenses on which input tax is claimed, if all purchases and expenses on which input tax is claimed relates to taxable supplies, are you okay? Why? If all purchases and expenses on which input tax is claimed relates to taxable supply, the amount deductible will be the total VAT shown on the VAT invoice. The amount deductible will be the total VAT shown on the VAT invoice. Total VAT shown on the VAT invoice by registered suppliers. Now, when you look at VAT, when you buy goods and there is VAT, there is a VAT invoice that is issued to you. What we are saying here is that if everything that the entity buys relates to what? Taxable supply, then what you can claim as your input VAT will be what is on what? The face of the invoice that you have in your hand. I get it. But if some of them are exempt and some are taxable, then you can only claim what belongs to what? The taxable. Second note you have to look at. The input VAT shown on the custom entry, the input VAT shown on the customs entry, the input VAT showed on the custom entry issued by SEPS, may be claimed. Issued by SEPS may be claimed. You good? So that's it. But the key question we then ask ourselves is, okay, if I can claim tax on my input VAT, then who should I be before I can claim the tax? So conditions for a refund of VAT paid on business inputs. Conditions for a refund of VAT paid on business inputs. What are some of the conditions? What should we meet? What are some of the conditions? At what point can we claim an input tax? What conditions must we satisfy before we can go to the Commissioner General and say, hey, we have incurred input tax, so give back our money to us? When your input tax is more than your output tax. Okay.
Then also when your the input tax are claiming, it's on when the input tax are claiming almost export and
Okay, so let's go the points down. 1. The business must be registered for VAT. The business must be registered for VAT. In other words, the business must be a registered VAT trader.
agent.
Or agent, yeah, it's the same thing. In other words, the business must be a registered VAT trader or agent. 2. The business must have submitted returns for all months. The business must have submitted returns for all months. The business must have submitted returns for all months for which it has been in operation. The business must have submitted returns for all months for which it has been in operation. Why do you think this is critical?
If you owe them,
Okay.
the loans, you need banks.
Okay. Yes, because at the end of the day, we want to see how much do you incur and how much do you actually collect for us, so that we can determine whether you have actually remitted all that has to be remitted or you have been remitted all. 3. The business must complete and submit prescribed VAT claim. The business must complete and submit a prescribed VAT claim form. Completed and submit a prescribed VAT claim form for the refund. For the refund. You good? Right. So now, meaning you go to the Ghana Revenue Authority, you go there, pick the form up, you complete it with the various details, which is going to be including your TIN number, your sales, and everything. Okay? Your total outflows, your total inflows in relation to that. Next one. The business, and that is the point you were mentioning earlier, the business must be engaged in the export of 25% or more of the output. So what kind of that half? The business must be engaged in the export of 25% or more of the output. So you should be exporting 25% or more of the output. So if the business is exporting less than that, then you don't qualify. But why do you think that would be a condition that is critical in the VAT? Why should the government be interested in you exporting more before you can claim your input VAT? Okay, because that will help the government to raise a lot of foreign exchange reserves, and so that will help in relation to that.
So maybe I'm sure it will serve as an encouragement
to the government or to who?
to their business.
Oh, okay.
The government will think that all the more come for it so that you export more.
Okay, so that's it. Next one. The VAT paid should qualify as deductible input VAT. The VAT paid should qualify as deductible input VAT. The VAT paid should qualify as deductible input VAT. And I've already mentioned this because We said if it is about exempt supply and you pay VAT, you're not going to be claiming. But it has to be what? A taxable supply. This is what is deductible for VAT purposes. Next one, the input VAT paid should exceed the output VAT paid. The input VAT paid should exceed the output VAT received. The input VAT paid should exceed the output VAT received. And then let me adjust. How many points do I have?
And 7. The access.
So let's add the last one. Possession of all original tax or VAT invoices. Possession of all VAT or tax invoices. So that is the idea about the input VAT. Finally, output. Output. What is an output VAT?
The VAT charge on the sales that the company.
So this one is the trader charging what? The customers. Okay, that's good. And when they charge, they now issue them with what? A tax invoice. We've spoken about that, right? You give them a tax invoice in relation to that. And so I'm not supposed to give you a definition, right? You already have that. This is the VAT a registered trader charges customers. This is the VAT a registered trader charges customers. This is the VAT a registered trader charges customers when the trader makes taxable supply of goods or services. When the trader makes taxable supplies of goods or services going out of the business. Going out of the business. Going out of the business. As I mentioned, when we sell, we are going to be charging the output tax or the output VAT. But we're going to be issuing the tax invoice. So what is a tax invoice? Tax invoice is an invoice. Certificate. So I can take it to school.
Can go for a job.
Oh, say it, I'm listening.
It's a certificate for all the given to the customer.
Yeah.
To show tax that has been paid already to be able to release which he will add to pay. That's a report CC. He will add to his returns when he makes his tax.
You are saying a lot of things, Wahi. A tax invoice is simply a document that is issued to the customer, which details out what the taxable goods that have been purchased. Okay, and then the tax that is charged.
Yeah.
No,
So I will see if I start using someone.
Okay, so let's put a definition down. A tax invoice is a document. A tax invoice is a document showing information on the supply of taxable goods or taxable services, showing information on the supply of taxable goods or taxable services to another person. on the supply of taxable goods or taxable services to another person. It is issued at the time of supply, very important. It is issued at the time of supply. So what does it include? The name of the customer, the name of the customer, what else? The time of supply, which is the date, okay? Time of supply. The address of the customer, the VAT registration number or TIN she wants, the description of the goods, including the quantity, description of the goods, including the quantity, all right. So that is what you need to understand in relation to that. And last week we did talk about registration of VAT. Requirement for registration. We spoke about all that, right? Okay.
Sure. Yeah, but you know what we'll talk about withholding tax. Next week.
I said we'll talk about it. Or you are saying we should talk about it?
Yes. Next week.
Have you guys spoken about withholding tax? Oh.
No.
Why are you lying?
Sure, that's another.
We did withholding tax.
We did? What was that? I can't find it. Right.
Okay, so let's look at some offenses and penalties in relation to that. Offenses and penalties. Okay, I think I've not taken withholding tax as, but I think we've spoken about it indirectly in various things.
No, end of the tax rates have changed and stuff like that. So you check one and meet you God willing, since he's the one and one of the
So offenses and penalties.
130 to 5
Offenses and penalties.